Is right now the right time to start investing is one of the questions that we hear a lot these days because some people are being fearful of what is going on right now, while other peoples are very optimistic about the stock market. So that's what we're going to talk about today. You're listening to Investing Mastermind podcast. My name is Sina Lundholt.
And I'm Michelle Markey.
So what we hear these days is people that are asking, is right now the time I should start investing? And or people that really want to get started and are eager to start investing right now because things are looking really great. The S&P 500 reached a new high recently. So is right now the right time? What do you think, Michelle? What are some of the thoughts that go through your head when people don't know if they should start right now, if they should wait, if they should learn about it, or jump right in?
Yeah, that's a big question. And we've talked a little bit about macro trends on previous episodes not too long ago. And usually we try not to focus on macro too much. We would prefer to focus on individual company stocks and trying to study them to see if they're within our circle of competence and if we would like to invest in them. And I think that's still the prevailing notion that no matter what the stock market is doing, I think it's still best to try to do your homework and not let yourself get scared by whether the market is really up or down, because that could cause you to not do anything. So instead of not doing anything, if you don't know enough information, try to find out more information to start. That's what I would do.
Yeah, 100%. But I also understand, there's like two things going on right now. Like people are being fearful because there's a new American administration. There's some things that are changing. Drill, baby, drill, for example, instead of green energy. And let's get back to using plastic straws and things like that. So a new direction, maybe. And okay, so which companies should I invest in now? That's also one of the questions that are out there a lot. Some people are being like fearful to get started because, oh, what's going to happen in the future? What's going to happen to McDonald's, for example, if there's a new administration that's going to say, ooh, over with all the fast foods, no more vaccines, things like that. So there are some people that are stalling and actually not doing anything. And then on the other hand, there are people that are like, okay, but when you look at the trend, the S&P 500 has gone up, 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 up for a very long time. So right now, let's be bullish. It's going to continue. And I would say, well, the stock market, no matter how you look at it, it's a very cyclical thing, just like life is cyclical. So when we look at trends and what we look at what has happened in the past, it's ups and downs, but over the long haul, it's usually a great idea. And there's always opportunities out there. And we can see that with different investing styles, from Benjamin Graham over John Templeton to Warren Buffett. And there's so many opportunities in the stock market. But of course, it's important to know which strategies are there and what actually fits my temperament or things like that, because we're talking about long-term investing, but there's also trading where people are in and out within a very, very short amount of time, trading on a momentum. And I think a lot of people, what they see is that momentum is a lot of people out there also on social media are momentum traders and are talking about that momentum. So people get fearful instead of thinking, okay, so over the long term, if I'm investing in this stock over the long term, is it then good, or should I listen to what is being said right now and be fearful to invest in certain parts of segments and things like that, or sectors? I would say right now it's a great time to actually get educated, like you say yourself, Michelle. Like read some books about investing. You have a YouTube channel that people can go listen to. I have a course you can take. There's a lot of great books about investors. If you're going to read about the stock market, make sure to pick books about successful investors because there's a ton of books about investing out there. And one of the traps I fell into as a very young person and also being interested in the stock market was, okay, I didn't know that there was different kind of trading strategies. Just didn't think about it. So I just read random material about it. And what I'm advocating for is to actually read something about some successful investors. So that actually did great and are interesting, or read, like, for example, Ray Dalio has some amazing books on and YouTube videos as well about how the stock market works and how the economic machine works and things like that to get educated about, so that you don't stall yourself in getting either over optimistic or over fearful? What do you have of advice, Michelle, to people that are here right now and maybe thinking, oh, should I get started? I'm fearful, or being like over optimistic and just throwing themselves in the in the game.
Yeah, it's definitely a difficult decision to make of do we hold on to some cash or do we buy the dip as some people are prone to doing? Since if you believe that we're in a continuous bull market and stocks are probably going to go up, maybe it's an opportunity to just buy the dip if you are eager, if that's your temperament, like Sina's talking about, and you just want to be in the market just to know what it's like, then that seems to have been a strategy that's worked for some people recently, assuming you've done your homework and you actually know what you're buying the dip in. So it's not to say you just buy any dip in the stock market. Like if Nvidia goes down a little bit, you just buy into it without really knowing. What about DeepSeek? What's going on with AI and crypto? If you're just buying willy-nilly into something without understanding what you're buying, I don't think that's such a good idea. But if you do understand certain companies and you're able to come in and buy the dip on companies that you believe in and that you think they will be bigger and stronger in the next 10 years, fine. Maybe you're getting the companies at a little bit of a discount, and that could be smart. That could be a good idea. I'm not saying that it's the perfect idea because, on the flip side, the more that people continue to believe that this market will just go up and up, it can also be a bit of a dangerous place to be because there are some people out there that are suggesting if people keep just investing in this market and there's more people investing in leverage funds and less people investing in more pessimistic bets, then leverage funds believe that you can keep making money and there's really no downside, but there could be more downside than people imagine. And just an example of what someone has said, someone named Ruchir Sharma, who I believe writes for the Financial Times, they wrote, the longer the bull run lasts, the more investors feel emboldened to buy any dip. And the bailout culture that dates back to the first rescue of a major bank, US Bank in 1984, that led to the Fed vowing to prop up the stock market in 1985. And since then, kind of this central institution rescue, like the Federal Reserve, those kinds of rescues have grown more generous and automatic, and it's encouraging greater speculative frenzies. And that's led to steadily rising market valuations. So if investors have come to see risks as asymmetric, that means they think there's a central state cap on losses and no limit on gains. So if you think about that, that means that you're willing to put more risk in the market and buy more on the dip. And you think that even if there's a market crash, it'll only be like, say, a 10% correction, and it won't be that bad like it was with the Great Depression or the dot-com bubble, because the US government is there to bail out companies and ultimately the market by pumping in a lot of fiscal money to help bring it up. So if you believe that and you believe, yeah, the government's just going to save everybody every time, then maybe it's not such a bad idea to keep investing in the markets because there's not much downside. Or there could come a day where the government is not going to bail out everybody. And maybe there actually will be significant losses like we've seen historically. So it could go either way. You never know.
Yeah, and of course, that's a frustrating answer when you maybe sit there and you're like, oh, should I get started? Should I wait? And there are always great companies out there on sale. At least from what I found is that oftentimes you can find gold that for some reason or the other is has dipped. And I'm not talking about just a little dip, but that you've actually understanding, okay, what is this, a dip or is it not? Like sometimes I also see people think, okay, this is a dip, but where the stock is still like insanely overpriced, where I'm like, this is not a dip. It could still go. And then the thing is, when you buy when things are really expensive, then you're kind of gambling with your money because, oh yeah, maybe it will go up again. But when something is like super expensive, then yeah. And the way you can see that is the PE value of a company. So for example, if you have an Apple phone, there's the stocks app, and in there you can easily look up companies and you can see the PE value, and that's an indicator of is the stock overpriced or not. If it's above 30, then it's very likely that it's overpriced. So it's a good indicator of when something is like super expensive. And yeah, I don't know, it's I just see people that are buying into dips that aren't actually dips. But also, one of the things that are, like I said, there are still companies that did actually dip into a zone where it's like, okay, this is getting interesting. Now we have this quality business. They've performed amazing. Now they're going through some sort of problematic event. Is it now that we should buy into this stock and actually trying to look into it? But yeah, what I see in Denmark is actually not the kind of bullish behavior, to be honest. It's more people are right now here are more waiting a little bit, I would say, like hesitant to get started because, again, especially here in Denmark, we're all about green energy and ESG, and it's a country where a lot of people are against oil and like wind energy, for example. So when things are changing, Danes are more hesitant to actually do anything. We're just waiting, seeing, okay, what is going on. But that just means that people are missing opportunities right now. And it's so funny to be here right now where people are like, nah, I'm not gonna get started right now. I'm a little bit hesitant to get started. And you're just thinking, but right now it's amazing to actually get to know things about the stock market. So it's great that you're listening here and actually getting educated about some of these things, because right now is the perfect time when everybody is like hesitant and things like that. That's when you actually want to learn, because then there might be opportunities coming up real soon. So that's my opinion.
Yeah, exactly. And interesting that you say there's still that interest in the ESG, environmental social governance type of investing approach, because in the US, I think a lot of that has gone out the window. A lot of people are no longer as in tune with the principles of ESG. I think people still acknowledge, yeah, you want to help the environment and you want the dolphins to survive, but you're not going to save the dolphins at the expense of making a profit in a company. So I think there's a little bit less of a focus on ESG nowadays and more of the way things maybe used to be, a little bit more capitalistic and maybe more in that focus rather than trying to do good for the world. And I know that doesn't sound great, but I think that's the vibe I'm getting with the newer administration now, is they're trying to do a lot of change. There's a lot of things that are not the status quo anymore. And I think there's somewhat of an American isolationist vibe, somewhat. So if we're trying to focus on different things here, it may not be what the rest of the world is focusing on, like the focus on environment. That might not be as currently the focus here because maybe some subsidies are being cut. And when there were subsidies towards some of these efforts that would promote ESG, that's why that could help promote those initiatives toward the environment and so on. But right now, it's less about that and a little bit more toward the current administration's objective. So I think America could be heading in a different direction. And it's not to say America will dictate what the rest of the world should do, but it just so happens that America still has a lot of sway in how world economies behave. And if world economies have to somewhat reflect and beat to the tune of the American drum, that's somewhat of what's still going to happen. So I would pay attention to what is happening in the American economy and the stock market, because whether it's for the better or worse, it's just the way that things are being driven now. So don't let it necessarily dictate how you choose to invest if you still believe in ESG or other things that are really important to you, but just be aware that America could be heading in a somewhat different direction than what a lot of people have been used to.
Yeah, 100%. But I also think it's going to take a little bit of time with these changes being implemented. I definitely hope there's going to be some other changes. Also, some of the things that's being talked about is the healthcare industry or the food and things like that, where some interesting things going on there as well. And what we'll see is what we'll most likely see, that things are going to pivot also, not only in ESG, but also in other sectors. But I don't necessarily think it's going to happen that that fast so that we can start being acclimated to the thoughts that we need to think differently. And also, like you say, Michelle, that just because the United States government has a certain direction, people shouldn't be stalled. And also all over the world, if you have certain values, if you have certain beliefs, you definitely need to continue to invest with your values and your beliefs. And there are, I'm sure, still a lot of companies out there that are going to work within the green sector as well in the future. And it's always a sector that's been a little bit difficult to invest in because it's still has required so much research and so much innovation within that green space. So it's required a lot of cash. It hasn't necessarily grown a whole lot cash wise in those industries because there's been so much innovation going on for years. But yeah, it sounded like also the president of Ford came out and spoke about that he thought the future, for example, within the automotive industry would be still focusing on electric, hybrid, but also, of course, fossil fuel powered vehicles. So yeah, I think there's going to be things that are going to pivot, but the question is how fast and how slow is it going to happen? That's the thing.
Yeah, and even if we can't predict what's going to happen at the macro level, like Sina said, focus on learning first. And for example, if you want to learn how to invest, Sina has some amazing courses where you can receive her coaching and guidance in how to think about investing, because the last thing from all of this that we want you to take away is continued paralysis. If you're stuck and you don't know what to turn, there are places to turn. So the worst thing you can do is just hide under a bed and not do anything. So by doing something, it doesn't mean you're necessarily investing tomorrow. It means you are getting out learning resources to prepare yourself for what investing entails. So I think the more that we equip ourselves with knowledge and skills, the more we have options and we can do things that can benefit ourselves and our families. So yeah, I think it's a good direction to always keep studying and learning, and you can't go wrong when you have an open mind to learning.
100% agree. And yeah, it's also, you can see of the people that invested in stocks versus just sitting in a bank account, there's a huge difference in the return there. All right, so we're getting towards the end of the episode today. So I'll say thank you to our listeners for listening in. We really appreciate you guys. And if you have any ideas to what we should discuss on the podcast, please do feel free to leave a comment. Do you have anything to say, or Michelle?
Yeah, just happy investing in 2025, no matter what happens.
Whoop whoop. On that high point, we'll be back on Tuesday in 2 weeks.
Till next time.
If you enjoyed the show and found the content informational, we would be super grateful if you would leave us a review and follow us wherever you get your podcasts so you automatically get new episodes in your feed.
The contents of the Investing Mastermind podcast are for educational, informational, and entertainment purposes only. None of this is investing advice, and if you need help in your personal situation, please consult with a professional.